Hey guys, welcome back to another video. Today we're going to be reacting a little bit to what this individual had to say about the Fed. Let's jump in.
I think things have changed for the Federal Reserve. The CPI coming in hotter than expected. University of Michigan inflation expectations, consumer expectations in the New York Fed. I know that Powell said that the committee back in May was not actively considering it, but he also said that they were looking at the economy, and I think the economy has changed to the point, and my reporting is such that at this point, I'd be dialing in a 75 if I were.
Okay, so Steve here is talking a little bit about the Fed and their previous meeting, in which case they talked or pledged to keep things at just a 0.5% or 50 basis point raise in upcoming meetings. Looking at the economy then, looking at their expectations for the inflation to curve or decline, things have changed a little bit since then. And now what Steve is calling for and what a lot of the market is anticipating is a potential for this Wednesday's Fed meeting to have a 75 basis point raise to try and get out in front of the inflation problem that we are experiencing here in the US as well as in many other places. So what he just talked about, and a great point that he made, is that the economy has changed since, or the economic numbers that we're seeing have changed since the previous meeting in which that pledge occurred, where we had, okay, we're going to do 50 basis points, and the market really liked that. The dollar came down. The Fed pledged their 50 basis points and the stock market rallied. But since then, we've had new data. We had the 8.6% inflation reading from CPI last Friday, which caused major concern. And now people are possibly factoring in that things could come out at 75 basis points to try and jump ahead of this major inflation problem that we're dealing with here in the US. Let's hear a little bit more.
Is that 6 weeks is a very long time between meetings, and that things
6 weeks right now feels like a lifetime. By the way, he's referring to when the Fed meets. Right now, with this inflation concern, he's probably right. They should probably have like every 2-3 weeks right now just to kind of continue to stay on top of this topic.
can change. I think what Powell was looking for when he said that 50 was on the table, that's what we're going to do 50s. He was looking at for the PCE to flatten out. It did not do that. The CPI did not flatten out. So I would say, Brian, and I think I said this at the very beginning of this process.
So this is very interesting. What he's basically saying is he's anticipating, like many other investors and traders are right now, is that Jerome Powell and the Fed may backpedal a little bit from their 50 basis point thing with the new economic data.
We are not in a period of forward guidance here. We're in a period of meeting by meeting, and the Fed is looking at things in the way they're developing and evolving, and I think there's been likely a pretty marked change in sentiment away from 50 towards 75. And to answer your question directly, I think it could mean they do more rather than less, certainly.
So there you go. I mean, this is basically the sentiment and why we are seeing today some major dollar movements. We take a look at the dollar, which broke out through its previous highs. A quick look at the dollar on the daily chart shows us kind of the reflection of what we just saw across market sentiment. We see right now that the US dollar is incredibly strong. In fact, I want to show you guys this. So we had this previous high looking at the US dollar. For those of you guys who are watching this actively, notice how price basically broke through that previous high, retested it, just politely retouched it, and found more buyers. So obviously, even with today's PPI numbers, which were a little bit less than expected, the market is still expecting or forecasting a potential 75 basis point raise on Wednesday. Now, how do we trade that? How do we take advantage of that? Because of course we could get into arguments on, oh, the Fed should have done more sooner and this and that. Oh, you shouldn't have printed so much stimulus. It's a double-edged sword, right? People were complaining that they couldn't pay their rent, and that caused a bunch of money printing. And then of course now we're dealing with the repercussions of printing so much money. And it's ugly, right? There's no shortcut to that. So how do we trade that? How do we take advantage of that? We maintain a dollar long bias for the time being here at A1 Trading. With these most recent numbers, we are expecting that the Fed is probably going to have to do more. 75 basis points is totally not off the table. In fact, increasingly likely, it seems like. So how do we trade that? Well, we're going to take a look at a couple things here. What I want to show you guys, for those of you who trade many different assets, I know my audience watches things like gold, the S&P, the dollar crosses, and other currency pairs. Let me show you something. Let's draw out a chart here for a second. If we do 50 basis points versus 75 basis points, how is it going to impact some of the different charts that we look at? And I'll do a quick look at that. So if we talk about gold, we'll talk about gold, we'll talk about USD, and we'll talk about the S&P. Okay, how is it going to impact each one of this? Stocks, the dollar, and the commodities or gold market specifically. How will these different decisions that we have on Wednesday, how will they impact the market? And here's how. So gold, if a 50 basis point happens, that would actually be sort of now the more timid of the two options. That would actually probably cause a bit of a rally on gold. In terms of the US dollar, this would definitely be a weakening thing because the dollar has been expecting a potential 75. And then finally, the SPY would also like that. The S&P 500 would potentially rally on that. Now, if we take a look at gold, on the 75 basis points, the exact opposite. This would be incredibly hawkish, very strong for USD. Right, so US dollar could come up on that, and the SPY and gold would come down respectively. So just a little bit of a cheat sheet here for you in terms of what we are expecting going into the Wednesday report. This is something that you should be aware of. It's going to rock the currency world. It's going to rock the commodities world and the indices world on that Wednesday report to see what the Fed ultimately decides between a 50 or 75 basis points. Again, increasingly likely that we could be headed this way, which is why we're seeing some dollar momentum pick up. Now time for some setups. Let's take a look at things like GBP USD, which we're short bias, sorry. We're long bias on the dollar until further notice. In fact, we actually got a edge finder reading of a lot of different currency pairs to consider here. Let me move myself out of the way. So you can see, again, GBP USD, AUD USD, and Euro USD all coming in at sells, favoring the dollar for the time being, as well as several other currency pairs. Feel free, by the way, we'll pause the video so you can check any of your respective currency pairs or charts that you look at. Remember, here are your different metrics. We track things like what the banks are doing. We track what the retail crowd is doing. We track seasonality, the trend, GDP, inflation, unemployment, and interest rates. These are the metrics that we scan for on our market scanner. By the way, down below in the pinned comment, get this tool 100% for free today. If you use the link down below in the pinned comment to send a message to Emily, just send her the word Edge Finder and you'll get a copy for free today to try this tool out. We're looking for more people and to hear more feedback. So please send the word Edge Finder to Emily and she'll hook you up with a free copy. Okay, so looking at this, how do we take advantage of this? Well, again, pound USD comes up to the top of the list for sells. I mean, look at this thing. This thing is a strong sell, really, really tanking right now. And if we take a look at this, the breakdown table here, why, you can kind of see that there's a lot of things stacked in favor of selling this thing, at least for the time being. We've been short biased on this for a couple days now. Looking at this, okay, so COT data, the banks and institutions favoring shorting the pound, buying the USD. How do I know that? Well, it's from the Commitment of Traders report data that comes out each week, and the USD is the favorite on the list. Retail sentiment, the crowd is super long biased on GBP USD. That's a red flag, right? If we know the crowd is buying the crap out of this pair, we got to be careful because we don't want to be in the crowd that loses money usually. Take a look at seasonality, the month of June, historically negative. Trend reading, strong downward trend. I mean, this is a stacked roster for looking for more short setups on pound USD until further notice. So we head back over to the chart, take a look at GBP USD, potential sells on a retest if we do get that in the coming days, potentially with the Fed meeting. That is one for the book. So again, we are maintaining until further notice that the expectation from the Fed is potentially 75 basis point raise, which could be dollar positive. Take a look at things like USD JPY, which comes in hot. We are looking at this one very closely. I am actually very close to potentially entering into a trade myself on UJ. So if price pulls back to this level, I actually like this for potential upside with a stop below structure. So if I take that trade, I'll share it in our Discord. Our Discord is linked down below in the description if you would like to sign up for access to that. Again, you can see every trade that I take and why. I've got a Euro CAD trade that I'm open right now. So every trade I share the full breakdown. So I am floating $100 on this trade. So maybe we can make some money on that one. But again, dollar yen is one on the watch list. It's also high up on the edge finder. If we take a look at UJ, you can see that this one has a strong buy reading overall. And this one for the same reason, very, very long favored by the institutional traders. We also take a look at the retail sentiment. The crowd is shorting this thing, so we are looking for longs on pullbacks. And so I am actually looking for this potentially to come back into play here today for more upside on dollar yen. Again, you can see the full breakdowns of any trades I take in the description. There is a link to join our Discord channel. Remember, get access to the Edge Finder for free today. Use the pinned comment down below. Send Emily a message and she'll hook you up. Thanks for watching. See you next time.